Okay, welcome to this presentation on income certification, which is an overview of affordable housing household income certification processes and practices. And before we jump in, just have a couple pieces of housekeeping. Okay, I just want to give folks a little bit of time to read the following disclaimers. And a little bit about the San Francisco Community Land Trust. SFCLT was formed in 2003 to combat displacement pressures in San Francisco. Today, we own and steward 17 buildings with approximately 180 units of permanently affordable housing for either rent or co-op ownership, and we are about to add a 17th building. Our properties are all located in San Francisco, and for the past 2 years, we've also been lending technical support to other community land trusts and small developers across the Bay Area, including things like asset management, brokerage, pro forma development support, and other topics. And my name is Sarah Scruggs. I'm the program director at SFCLT, and I will be walking you through this presentation. So, where we are going today, we're going to first talk about governing rules and sources when it comes to income certification, and then discuss the income certification process itself. And finally, look at some income calculation examples. How do you actually do this once you have somebody's paperwork? Okay, and when it comes to governing rules and sources, we're going to look at loan agreements. So what do the financiers, typically public financiers, government, have to say about how you do income certification and when you do it? Area median income sources. So what defines what area median income is for your area and for your particular building and the units in your building. And then finally, a really important guide that the Department of Housing and Urban Development, otherwise known as HUD, has put out that includes a guide to determining income. Okay, so your loan agreements. These have various names, but the typical names for affordable housing loan agreements that describe something about income certification requirements. These are the two most common names that I have seen. First one is regulatory agreement, and the other one is declaration of restrictions, and sometimes that's elongated to declaration of restrictions and affordable housing covenants. But these are the two names that I most commonly see. It can be very confusing because when you're uh, closing on an affordable housing development or refinancing or whatever you're doing, there are a lot of agreements that are being signed. So when you're thinking about income certification, these are the names of the documents that you're going to most likely want to go to first to find out what may be required of you. And then some key terms to look for in these agreements themselves. And again, these are just some that I typically see in the agreements that my organization uses and past organizations that I've been a part of. But there may be other terms. Median income is one of them. So what is the median income target for the building or particular units? The maximum rent is another key term to look for. That has to do with income certification. And then also qualified household and tenants. How is that defined? These are all important things to look at when you're thinking about an income certification process and what is required in the documents that you have signed. And there are basic information basic pieces of information that are included in these agreements. But the really, 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 really detailed information about how an income certification process is actually handled, those are often included in other documents that are referenced in the agreements themselves. So be prepared for that as well. You're going to get some basics in the regulatory agreement or the declaration of restrictions, and they're often going to reference appendices or other documents where you can find more detailed information. And area median income sources. So first of all, what is area median income? It is the midpoint of a region's income distribution, meaning half of the households earn more than the area median income and half earn less. And AMI is calculated by the government, the federal government, using data from the Census and American Community Survey, and it serves as a benchmark for eligibility for housing programs and subsidies. And the two typical sources that I see used for affordable housing projects in California include the below. So HUD, the Department of Housing and Urban Development, their median family income. And I've included a website there. This is they make it effective the first April 1st of every year. And HUD median family income as a calculation is often what's used by housing authorities and local jurisdictions that provide their own local public financing for affordable housing. That's not always the case, but this is often used by those entities. And then there's the California Tax Credit Allocation Committee, or TCAC. And this way of calculating AMI is also effective on the 1st of April of every year. And it's used for tax credit affordable housing projects in California. So affordable housing projects that are funded through tax credit financing, and occasionally for non-tax credit projects. And I pulled out this area median income chart from Marin County's Housing Authority. So this is what the charts typically look like. You always see household size on the left-hand column. So from 1 to however many members of the household somebody may have. And then along the top row, the percentage of income, the percentage AMI. Extremely low income is typically 30% and below, and then very low income, low, medium, moderate, and it just details. So for example, what is the maximum income for a low income 80% AMI one person household in Marin County? At this point, it's $108,300. So this is how you read that chart. You always are going to want to go back and look at the chart that is applicable to the time frame in which you are doing your income certification, because it changes every year on April 1st, and you want to make sure you're using the most up-to-date chart. And now the very important HUD guide to determining income. So HUD has this huge handbook, HUD Handbook 4350.3. And in Chapter 5 is its guide to determining income. And it includes extremely detailed information on how to determine household income for affordable housing developments. I've included the link here, and there are lots of places on the internet that take PDFs out of this handbook, and this one in particular. So you can find this resource very easily online from a lot of different places. And there are two methods generally of calculating household income. First is just looking at gross income in general. And so that's annual income that people have before taxes are taken out. And then another method that often is used is adjusted income or adjusted gross income. So annual gross income minus certain permitted deductions. And some of those deductions include dependent child care expenses, elderly household, disability assistance, and medical. And we're going to focus mostly on gross income today. There are certain federal affordable housing funding sources that require the use of adjusted gross income. But again, just for the sake of clarity, and just making this as easy as possible, we're going to focus on gross income. And I want to really stress that the method used to calculate income is determined by the source of affordable housing financing that you have in your building, or the primary source, whatever is concerned, the most primary source. So you want to really make sure that you pay attention so that you're not missing the detail on how you are required to calculate a household's income. Okay, and we're going to look at the income certification process itself, how you work with residents through this very complicated and sometimes frustrating process, whose income is counted, what income is included, what income is typically excluded, and then some common income documentation that is used in the process. So, as you know, this is a very complicated and sometimes very frustrating process, both for those who are applying for an affordable housing development and for those who have to annually provide their income documentation um, as part of the requirement of them living in a place that's financed by affordable housing subsidy or loans. So here are some best practices for how to work with residents through this process. First of all, you want to make sure that things are as clear as possible. You want to detail to people what is expected and by when. There's information if, it's a rental in people's leases, but you probably also want to take out information and just, provide people with a one-pager when they're first signing their lease that makes it pretty clear on what is going to be required of them. Confidentiality. You want to explain how documents are stored and also who they're shared with. Uh, you know, Providing your income documentation and certain pieces of documentation that include social security numbers and everything else, it can be quite scary. And so you just want to be clear with people about how you're holding their paperwork and how secure it is and who is going to be seeing it. Consistency. So for annual certifications, you want to conduct them at the same time each year. And this makes it easier on those that are conducting the certifications to be able to plan, and then also for the residents who are being asked to fill out forms and provide documentation. So it's just part of, okay, I do this every February, so they know to expect it. So it can just become part of the routine. It just helps make it easier. And finally, access. Providing different ways to submit documentation and sign forms. Whether some people, they want to do it online. Other people, it's going to have to be in person. So just figuring out what that looks like and then providing forms in various languages. That can be really, really, really important for someone to feel okay and to provide the information that is needed and to make sure that it's accurate. So in an income certification process, whose income is counted? Uh, it's basically almost all members of the household that are over 18. So the head of the household, partners of the head of the household, co-heads of household, any adults, so anyone 18 or over, dependents, children under 18 are not included. And then when it comes to full-time students over the age of 18, the earned income that they have is excluded to the extent that it exceeds $480. So you would only usually include $480 for students that are over 18 and are full-time students. And then non-members. So it's somebody who may be a live-in aide. They are not included. But again, all members of the household who are 18 or over and not full-time students, their employment income would definitely be included. And then when it comes to assets, everyone's assets would be included, and there's particular ways to calculate income from assets. And the source of this little chart is, again, that very, very handy HUD handbook, their Chapter 5 guide for determining income. So I really, really encourage people to find that and use it. It's a helpful resource. And any trainings that happen on income certification will often also reference and use that handbook as well. So what income is included when you're assessing what a household's income is? You're looking at earned income, wages, salaries, tips, and bonuses from a job. You're looking at net income from a business or a profession. So for somebody who owns a business, even if it's as small as like them just being self-employed, their income minus expenses, commissions and overtime pay, and income from seasonal or intermittent work that is projected over a 12-month period. And you're also looking at unearned income, which include benefits like Social Security, disability, and TANF, so food benefits, uh, and for children, pensions and annuities, child support payments, alimony, and other regular payments. And then finally, income from assets, which is it typically is smaller. It depends. Interest and dividends from stocks, bonds, and other investments. Could also be interest from a bank account, and then any net rental income from properties. All that's less likely to happen when you're looking at somebody's income as far as an affordable housing income certification process, because they're often not allowed to own rental property, but that could be also an income from an asset. And the types of income that are typically excluded. That includes, again, income from children that are under 18 years of age, any foster care payments that adults or children may be receiving, lump sums, so uh, amounts that are coming at one time and aren't like regular over time, and that includes inheritances, some insurance payments, capital gains, settlement payments for personal or property loss. Student financial aid typically is excluded, especially when it doesn't exceed someone's educational expenses. And then certain government and assistance programs. And those include SNAP, the food program for women, infant, and children's WIC, certain federal and state tax refunds and stimulus payments, all of the emergency rental assistance payments that were made throughout COVID and have continued. I know that those payments existed before, but they've become large and ubiquitous, and reimbursement of health and medical expenses. And then the other types of income that are typically excluded include the income of live-in aides. Again, they're not included in the household. Certain programs under Workforce Innovation and Opportunity Act, distributions from ABLE accounts, and some civil court settlements and malpractice awards. Okay, and some common income documentation that residents are asked to provide include tax returns, W-2s from an employer, pay stubs related to employment, benefit statements. So, Social Security, disability, bank accounts, and a certain number of months of bank accounts. Sometimes we also look at pay app accounts, especially for people that are self-employed, because sometimes that's how they get their money. And then also profit and loss statements for those people that run their own businesses or self-employed. There may be other common income documentation, especially for people who are self-attesting to something, but these are the most common types of documents that you're asking someone to submit. Okay, let's go over some income calculation examples. And all of these that we're going to go through again came from that very, very handy HUD handbook, Chapter 5. I do want to make a quick disclaimer on this section. some public lenders, what's detailed in your loan documents, some lenders have very strict guidelines on how you must calculate income and the income documents that you must request and use. So the following calculation examples, they demonstrate some ways that one can calculate gross income. But please, 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 please always pay attention to the requirements for your particular affordable housing development. Okay, so our first example, if we look here at the top, are family members, position in the family, age, income sources. So this is just giving you a snapshot of what this household looks like. We have Ricky Ricardo, and he receives Social Security, $625 a month, and he also receives a pension from a union in the amount of $25 every quarter. Lucy's income includes Social Security as well, with a lower monthly amount. She grossed 4,200 for voice lessons last year and had business expenses of 1,250 for equipment and soundproofing. And then finally, Ricky. Ricky earns $330 a week as an interpreter for a nonprofit. And these are the income sources that exist for this family of three. And if you look at the chart on the bottom right, anticipated annual income, it's broken down by family members and the type of income it is. So as it relates to Ricky, we have $7,600 of benefits / pensions. For Lucy, we have $1,440 as it relates to Social Security. And then the other income is coming from her business minus the expenses. And then Ricky, his wages and salaries come to $17,160. When you add all that up, you get the very bottom right, number 7. And this family's household income is $29,150. And here's a second income calculation example. So this family also is a family of 3. Try to make it simple. I know sometimes it can be very difficult when you've got really, really, really large household household sizes, but try to make this simple. So you've got George Jefferson, who works full time with a clear hourly rate, and also receives some money on a consistent basis per month in regards to a settlement. You have Eloise, who works a certain number of hours a week at $7.50 per hour, and then also is receiving $50 a month from her mother to help with expenses. And then Lionel is a full-time student, and he's got a part-time job, 15 hours a week at a bookstore, $6 an hour for 46 weeks when his classes are in session. And then if you go down to the anticipated annual income chart below that, again, the family members are listed on the left. George's wages and salaries are $15,080. His income from the Agent Orange settlement is not included because that is eventually going to end. You've got Eloise, and most of her amount is in wages and salaries. And then the $600 a year in other income, gift money from her mother. And then Lionel, because he is a full-time student, only the first $480 of his earnings count toward the family income. So when you add everything up, again on the bottom right, number 7, this family's household income is $23,180. And then the final example that we're going to go over is just a little bit on irregular employment income. So income or benefits that are not coming in at a regular rate. So there's not like a per hour amount. There's not a per month amount that's being received. So the first example is someone who's doing seasonal work. Clyde is a roofer. He works only from April through September. Doesn't work in bad weather, and his employer is able to provide information that shows the total number of regular and overtime hours that he worked in the past 3 years. And even if it was just the past year, that would still be good enough. And so you want to be able to calculate what his income is by using the average number of hours over the past 3 years times his current regular pay rate and the average overtime hours times his current overtime pay rate. So that's how you would figure out uh, what would be your income calculation for Clyde, who does seasonal work. And then there's the sporadic work category. So here in this example, Justin Cowan is not always well enough to work full time. And when she is, she works as a typist in a temporary agency. Last year, she worked a total of nearly 6 months, but this year she's had more medical problems and she doesn't know how or when she'll be able to work. So because of that, at the time of her recertification, the suggestion here is that it's best to exclude her employment income and remind her to return for an interim recertification when she resumes work. And then finally, and this happens for us a lot, self-employment income. So in this example, Mary is selling beauty products door to door on consignment. She makes most of her money during a certain time of the year, and she doesn't have formal records of her income. This happens a lot, other than a copy of the IRS form and 40 that she files each year. And so with no other information available, the owner will use the income reflected on Mary's copy of her Form 1040 as her annual income. If you're also required to collect bank account statements, you may also see income that's coming in there and ask questions about that and be able to assess whether that should be included in the self-employment income calculation as well. Now, we're not going to go over how to calculate income from assets, but I do want to direct people to the HUD handbook for detailed information about how to do that. And I want to thank you so much for sticking through I'll speak for myself. Sometimes this process can feel overly restrictive and complicated, and I know can be very stressful and frustrating for residents. So I hope this made it a little bit clearer, gave some ideas about how to make the process easier and clearer for residents. And again, if there are any questions that folks have, please do not hesitate to reach out. And thank you so much for listening to this presentation.